Kia ora, good morning, good Monday morning. I am Mike from Markets. This is Kiwibank Markets in a minute. The iPhone this morning's on a different rig thing. It's probably not going to make a massive difference. It's just a little bit weird for me. Anyway, three major topics to cover this morning. More coronavirus headlines, not good. US employment data, pretty darn good, actually. And coming across both of those are comments from the Fed's Jerome Powell. Yeah, right, coronavirus. It is now officially responsible for more reported deaths than SARS. That is certainly an attention-grabbing headline, and it certainly grabbed the attention of markets. Over on the US data front, we had a mixed bag there. Expectations were for the creation of 160,000 jobs in January. That number actually came in at 225,000. Yeah, decent. Average hourly earnings, they were 3.1%. Expected was 3 flat. But, and it's kind of a big but, the headline unemployment rate that ticked up from the multi-decade low of 3.5% to a almost multi-decade low of 3.6%. Now that basically occurred because the size of the labour force increased. Participation rate went higher. Kind of a good thing, yeah. And then there's Jerome Powell, the big man himself. He testified to Congress that, yeah, corona, it's a near-term concern, but the good ship, US economy, it's on a steady course. They're coming out of the rough waters. Basically, he views the odds of a recession as diminishing, which means the odds of negative interest rate action from the Fed, they're slipping away. Yeah, so that's the bulk of what happened. As for what it meant for markets, right, the Kiwi tumbled on the corona headlines, 63.94, that was the low of the weekend, and lowest level since November. The Aussie dollar hit equally hard. The yen, that went the other way, advancing on a risk-off play kind of dealio. Kiwi interest rates also a touch lower this morning. For the wider global markets, yeah, the combination of corona headlines, decent job numbers out of the US, and a tentatively upbeat Jerome Powell, that all contributed to a bit of a slip in global equities. Stock markets usually benefit from the prospect of lower interest rates. So if the odds of lower rates lessen, then yeah, stocks go lower. Lots of lowers and lots of L's in there. Anyway, US dollar, that is higher on par with the yen. Gold, also higher, and oil off the pace. So a real mixed bag, but the key takeaway is probably risk-off-ish themes continue because we are not out of the corona woods just yet. Yeah, right. That's probably enough, I think. I will add a little more colour to movements in the New Zealand dollar in first hand. Otherwise, have a happy Monday. Kia pai tōra.